Good morning, ladies and gentlemen. Welcome back. Earnings season is here again. That magical time when corporate America bares its soul and the market responds with all the compassion of a cat watching you trip over a chair. Now, we have 6 companies, 6 different moods, so let's get into what each of these did. To kick this party off for everybody, we have AMD, and look at how beautiful this chart is right now, down 14% already in our opening market. But they just dropped Q2 numbers, and that's what people really care about. 7.6 billion in revenue, which beat expectations. EPS, however, 48 cents. It missed by a penny. 1 penny. Wall Street reacted like Lisa Sue personally keyed their cars. The stock down 5%. Now, why did this happen exactly? Some of you are probably confused. Well, they took an $800 million hit thanks to the Trump administration's ban on selling their MI308 chips to China. Now, I'm not saying Trump's policy hurt American innovation, but NVIDIA took a $4.5 billion hit for the same thing. So if AMD and NVIDIA were in a bar fight, this was like someone smashing a chair over both their heads and then asking them to pay for the chair. The good news, the ban got reversed and AMD's got new MI350 chips coming, 4 times the AI power, 35 times the inferencing ability, which sounds impressive until you realize inferencing ability is just a fancy way of saying it guesses stuff better now. Now, next up, we have SMCI. And with SMCI, or Supermicro, as some of you may know them as, last year they were the AI hardware darling. This year they missed revenue, cut their full year outlook, and the stock tanked harder than a VR headset stock in 2017. Their gross margins dropped to 9.5%, which is what happens when you sell servers like Costco sells hot dogs. Fast, cheap, and hoping nobody notices you're losing money on every single one. They also have lawsuits, accounting questions, and short sellers breathing down their neck. If AI is the gold rush, SMCI is the guy selling shovels, except half of them are bent and the store is currently on fire. I did not pull the final numbers for these guys, but as we can see, they're down 19%. If we look here, yeah, they missed EPS by about 4 cents here, and it looks like they are not doing too hot here on revenue either. Revenue dropping to 4.6 billion with a net income of 108.78 million. Now, the next one we have is what wanted to be the meme lord of the party, the hot girl that everyone was paying attention to. Opendoor had a moment this summer. It rallied 900% because retail traders decided, hey, real estate stock sounds sexy. Said nobody ever, but okay. They even canceled a planned 50-to-1 reverse split because the stock price shot up. But then earnings hit. Revenue guidance for next quarter down almost 50%. CEO Carrie Wheeler got on a call and delivered what analysts described as low energy, which is not great when your investors wanted a rousing AI-fueled vision speech. Yeah, good luck with that. Instead, they got an insurance seminar that was disguised as a timeshare sales as well. Activists are saying Opendoor should become the AI lab of housing, which sounds cool, but right now they're more like Zillow with a hangover, or if Walmart jumped into the real estate game. Now, the next one we have here is Snapchat. And with Snapchat, they had a horrible quarter, folks. Snapchat, they grew their daily active users to 469 million. Congrats, you're basically the population of North America checking in daily to see what you look like with dog ears. Unfortunately, their ad revenue is tanking because of tech glitches. Advertisers were literally paying less by accident, which is like McDonald's ringing up for 25 cents because the register's broken. They've got a subscription service, Snapchat Plus, growing fast, but it's still small change. Guidance for next quarter is fine, but Wall Street is not here for fine. They want growth and profit. Right now, Snap has one, but not the other. Like a guy who's hot, but also unemployed. Next up, and one of our finals, is Uber. Now, Uber, on the other hand, is printing money, $12.7 billion in revenue, $1.4 billion in net income, free cash flow at $2.5 billion. They even approved a $20 billion share buyback because they've run out of places to put their money, apparently. CEO says their platform strategy is working. Yeah, it's working so well that Uber has become the rare tech company where you open the earnings report and don't immediately start stress drinking. And then the belle of the ball from the earnings that we covered so far, Disney. Revenue missed slightly, but earnings beat. Disney Plus subscribers are up, Hulu's up, and they're buying NFL RedZone, which is perfect because nothing says family entertainment like 8 hours of men smashing into each other every Sunday. They're also launching a new ESPN streaming service because apparently Disney's planning to own everything you watch and everything you argue about while watching it. The stock still dropped 5%, and it's currently down 3% in today's session. Because Wall Street's basically like, cool moves, but show me the money, which is ironic coming from people whose entire job is betting on future money. So here's our earnings scoreboard for the day. Uber, the comeback kid. Now a money printing machine. Disney, still the king of IP, but streaming's a slow climb. AMD, solid chips, shaky politics. Oh, SMCI, from AI star to AI stress case. Open door, meme magic gone. Back to math class, folks, and put the fries in the bag. And Snap, popular, but popularity doesn't pay rent unless you start an OnlyFans. Moral of the story, if you want to impress Wall Street, make money, talk about AI, and for God's sake, don't miss revenue by even a penny. So what do you think? Is AMD the next AI beast with their MI350 being cleared and starting to ship? Is Uber officially a safe stock? And should Open Door CEO start drinking espresso before earnings calls so she doesn't make the whole room fall asleep? Drop your takes below, smash the like button, and subscribe because next week we'll see which companies are flying to the moon and which are just buying tickets on Spirit Airlines. Have a great morning, everybody, and I'll see you in the markets.